Now, I was just talking to a dividend investor as of recent. They're relatively younger, and they were asking me how much you really have to invest long-term into names like SCHD, DGRO, VYM, some of the popular dividend growth names to truly turn a relatively small amount of money into a massive portfolio later on. And the funny thing is, as of recently, I've sort of been thinking about this more and more, just because with so many new ETFs coming out, especially in the dividend or income investing space, I've sort of had a pull to go back to the basics and really refocus on some of the core positions in my long-term portfolio, like SCHD, DGRO, and VYM, for example. Now, in this video, we're going to answer the question of is $300 per month invested into names like SCHD, DGRO, or VYM, dividend growth ETFs that have not only grown over time, but also been paying more and more in dividends year after year. Now, a $300 per month investment budget seems sort of reasonable for almost every single investor out there. So I want to answer the question and see exactly what $300 a month long-term would turn into investing into some of these dividend growth beasts like we're talking about. So if you're a dividend growth investor and you want to see some crazy math, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, again, in the context of today's video, we're going to be talking about a $300 per month investment into different names like SCHD, DGRO, VYM. And of course, you yourself can do the same exact exercise, mess around with some numbers with any stocks or ETFs you feel like. Now, $300 per month is $3,600 per year. And just out of complete curiosity, I want to know how much you guys on average invest into stocks or ETFs on a monthly basis. Comment down below and let me know. But the cool part about this video specifically is that, spoiler alert, a $300 investment long-term into names like SCHD, DGRO, and VYM can turn a small portfolio into a massive one. So if that's what you were looking for, the answer is yes. Now, again, generally speaking, the way that this works is that different names like SCHD, DGRO, and VYM, they buy into a high quality basket of stocks. And of course, there's some crossover and overlap with all three of these ETFs. But for the most part, they buy into different names that over time have paid dividends, paid more and more in dividends over time, which has offered some massive dividend growth for investors. Now, whether you're talking SCHD, DGRO, or VYM, every single one of these ETFs for the most part have had a nice positive long-term total performance. And again, some of these ETFs offering things a little bit different than others. Some of these three offering a little bit more dividend yield starting off, dividend growth starting off, or maybe even growth potential. But the simple idea to building a long-term compounding portfolio like the one that I've been building over the last decade that you can see right here is that the longer you buy into different dividend-paying stocks and ETFs, you get paid dividends along the way, you keep adding a little bit more money on top of that, and then over time you get more and more shares of different dividend-paying stocks and ETFs that you guessed it are going to pay you more and more in dividends every single month or every single quarter. And I remember specifically when I first got to different milestones like earning $100 per month consistently, which at that point was enough to allow me to purchase more dividend-paying stocks and ETFs at a bit faster of a rate. And now at this point, I currently earn over $7,000 every single month if we were to average things out, which means that I have a considerable amount of cash flow, which I use on a consistent monthly basis to, you guessed it, buy even more dividend-paying stocks and ETFs. And that's exactly how the snowball effect really takes place. And even if you have only $300 to invest on a monthly basis, you can still build a snowball of a portfolio, which I'm going to share with you how right here. Now, besides all the other obvious inputs on how buying into high quality ETFs like SCHD, DGRO, and VYM can turn a small portfolio into a massive one, and I just mean that at least historically, all three of those ETFs have grown in price. One of the main metrics that I always look at and that I wish I would have understood a lot more in my early days of investing was dividend growth rates. Now, for example, you can see right here, this is an SCHD dividend calculator that I built, and it shows that as of right now, I have 2,349 shares of SCHD, which currently pay me around $2,325 per year in dividends. Now, with a 10% dividend growth rate, which is more or less what we've been seeing year over year with SCHD, this means that even if I don't buy another single share of SCHD, based off of my current shares, my dividend income is going to go up substantially and compound year after year after year. Now, in this calculator, I don't even have it inputted to buy more and more shares over time. This is just based off of the only shares that I have as of right now, but you can sort of get the idea and see exactly how this could compound over the next, say, 10, 20, 30 years, etc. Now, this is the fun part, actually inputting some numbers into a dividend calculator, and there's tons of free ones across the internet. You guys can use whatever one you want. But for example, based off of SCHD's numbers, a $10,000 initial investment, $3,600 per year after that. So this is just $300 more per month. And before you guys say, well, you start off with $10,000, you could of course start off with zero, or you could start off with $1 million, mess around with some numbers and see what makes sense for your situation. But with a 3.5% yield, a 10% dividend increase, 6% annual share price increase, 30 years invested. So again, this is for a relatively younger investor. investor, this might not necessarily work out if you're, say, 75 years old. But with just a $10,000 investment and then $300 every single month from there, you can see that over the years it takes some time for the snowball to really get going, but 10 years in, this portfolio is already at $70,000 plus from just $300 per month added every single month. Now, this is simply because year after year, the dividends are going up and being reinvested along with that consistent $3,600 every single year, which can again compound a relatively small portfolio into a massive one, to be specific, around $1.1 million. Again, this is just to be estimated over 30 years invested. Now, the cool thing is that later on, if you want to start contributing a little bit more, which is probably what's going to happen as you start to maybe move up in your career or maybe just have more investable income, you can of course add more and more to your portfolio on top of the dividends and on top of that $300 to build the portfolio a lot faster. This is exactly what happened with my portfolio over the past decade or so. Certain months, depending on what was going on in life, I didn't have as much money to invest, but there was also plenty of months where I had tons of extra money on top of the monthly dividends to add in to buy more shares of more stocks and ETFs, etc. Now, even though we only went through the math for SCHD, I promise you guys that more or less DGRO and VYM and lots of the other high quality dividend growth ETFs more or less are going to look like the same thing year after year, especially if you say have 30 years to invest and you just consistently invest over time. Now, again, all the numbers we talked about are just based off of estimations from previous performance, which does not indicate future performance, but again, it just gives you an idea of what could happen long term and to show you exactly what the dividend snowball effect really looks like. But the bigger takeaway that I want all of you guys to have is that just a $300 investment, more or less, it could even be less than that, invested in high quality ETFs over the long term, at least based off of previous numbers, can 100% without a doubt grow a small portfolio into a massive one over the long term. So now that we talked about what a $300 investment could potentially look like, invest it into any of the high quality ETFs like VYM, DGRO, or of course like the example we talked about, SCHD. I lastly, most importantly, want to hear from you guys down below. Which dividend growth ETF is your favorite across the entire market that you consistently buy and add shares of to your portfolio? My personal favorite for my portfolio is SCHD as of right now, which as you guys saw, I have over 2,300 shares. But comment down below what your favorite one is, let me know in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.